Article written by Samuel Smith. Doordash is for the unintelligent investor. Let's go through this. So he says, summary, Dash's IPO was fueled by a quickly vanishing COVID-19 tailwind. Dash has no moat. Dash's valuation remains outlandishly high. Here is where you should invest instead. So 2020 has been a year of incredibly successful IPOs, hitting the stock market just today, Wednesday. Reuters released an article titled European Tech Firms Seek to Share in US IPO Bonanza. Let's check out a few of them. So Airbnb, killer, doing so well. Source, Airbnb priced its IPO at $68 back on December the 9th, already above its marketed range of 50 to 60, and today surged 10.6 to sit at 138 per share. In fact, that's even gone even further up. So that's just crazy, pure insanity. That said, at least Airbnb has some real competitive advantages in its industry that cannot be said for the next hot IPO on the list, Doordash. Right, and we also saw Doordash list for way over the starting point. For anyone wanting to build wealth for a secure retirement, or worse yet, invest to sustain themselves in the current retirement, please heed this warning. Ignore the noise and dash away from Dash as fast as you can. Sell to the irrationally exuberant optimists. As Benjamin Graham once said, the intelligent investor is a realist who sells to optimists and buys from pessimists. It's a pretty cool saying. So our business on the stock stems from three key theses. Dash's IPO was fueled by quickly vanishing COVID-19 tailwind. Dash has no moat. Dash's valuation remains outlandishly high. And we will delve into these in more depth and then discuss briefly better alternatives in the current market for those seeking to build and secure their retirement. So I'm also going to leave you the link to this article. COVID-19 tailwind vanishing. It's no secret that COVID-19 has absolutely devastated the restaurant industry by either scaring people into staying away or public health measures from governments forcibly shutting down food and beverage service establishments. At the same time, their loss was a gain of food delivery companies such as Dash, as people who wanted to eat from their favorite restaurants had to either order delivery or pick it up themselves. Similarly to the boost provided to work from the home, technology companies like Zoom and home delivery retail businesses like Amazon, food delivery businesses boomed over the past year. There's a graph showing that. While undoubtedly there will be some long-term benefit to Dash's business model from the exposure it was unable to get this year, it would likely have never gotten otherwise. The main demand driver is in the process of being eliminated as we speak. Just the other day, Berkshire Hathaway's Charlie Munger predicted in an interview that the COVID-19 scare will be relegated to insignificance very quickly thanks to the vaccine. I think that's still going to take a while, though. It's amazing. I watched the polio get totally killed by the vaccinations. They'll spread these vaccines over the world so fast it'll make your head spin. Already the urge to get out and socialize is overwhelming people's fear of the virus, as recent trips to my packed to the Guild's local mall have demonstrated. No moat. Another factor to consider is that many restaurants have decided to invest in their own curbside pickup and even free home delivery options, as the fees they pay to companies like Dash for including them in their delivery service network can be a bit hefty, between 10 and 25% of the revenue. Additionally, the food delivery markets is saturated with competitors such as Uber Eats, Grubhub, and there is very little to differentiate them. As long as you have sufficient driver capacity, there's no way to make your food delivery service faster than the competitors, since you are all bound by the same speed limits on the roads, and the cost of gas, vehicles, and labor already scraping the bottom of the barrel. Food delivery is a highly commoditized service with no real value add opportunities. Perhaps the biggest headwind is that delivery costs and fees are roughly equivalent to a typical order for a 1 to 2 person household. So a $15 order will often cost between $25 and $30 after fees and tip. With restaurants increasingly investing in their own infrastructure to minimize dash fees and competition plentiful in a highly commoditized industry, margins are destined to remain razor thin, if not negative. As scaling might provide some benefits that can enable apps to lower their restaurant fees and thereby temporarily gain an edge over competitors in their food delivery offerings to customers. It might also enable them to lower their subscription costs and delivery fees to customers and thereby further gain an edge over the competition. However, these are advantages that will be inevitably temporary in nature and will lead to a vicious race to the bottom pricing war that will keep margins extremely tight and send some of these businesses into bankruptcy. Dash is currently has a negative 12% trailing 12-month net operating profit after tax margin despite enjoying the enormous COVID-19 demand driver. While many IPOs start out with negative margins and scale their way into profitability, we just do not see a viable path to significant and sustainable scaling benefits that will meaningfully contribute to the firm's bottom line. I want to give Cover a shout out, Kover, the gig protection plan. Underneath this video, you'll find a link. You get 1 month free with my link. 24/7 health service, automatic mileage tracking, paid time off. And by the way, these packages only start at $7 a month. The one that I really like is their legal protection with their partner, LegalRideshare. Right, you may want to check them out. They are in Chicago and LegalRideshare.com. And they will send a legal letter out if you get deactivated or terminated. But what makes them so unique is that they've really focused on the gig industry in case you get into an injury. If you have riders on board that were injured, if your car is damaged during a collision, if you're losing out on wages, they will handle the entire insurance claim process for you. And that is LegalRideshare.com. Here it is. I'll show you the logo right there. You can see it, right? So LegalRideshare.com. So please leave your feedback. What you think about the Doordash stock. Will it fly? Will it tank? Always excited to hear your feedback. Thank you.